Dot focus. We're gonna do a quick analysis on gold. Gold is one of my favorite metals to trade. Um, I am in currently a loss USD. I would analyze it, but I don't want to affect my psychology because once one can we trade that's in a loss, you influence yourself psychologically. Decision is slow psychologically. Yeah, but now you just wanna do quick analysis on gold versus the US dollar. That is the weekly chart. I mean, who would have caught this move? Who? Nakanachi. No one else but me. A dodge, my guy, on the weekly time frame. Caught it before it happened. I'm too good. Let's go to a lower time frame, 4 hour. Put it on landscape. Landscape. Hopefully you didn't see any personal detail. Zoom out. Okay, so currently we're in beautiful buys. So now I want to teach you how to hold a trade when you're in profit, because most people always focus on the stop loss as if like they're not gonna win a trade. Whenever I ask my students why you're afraid of trading, they always tell me that Vika uluza 200, Vika uluza 1,000 rand, Vika uluza 2,000. Why jonga njani forex? Forex is a 3-to-1 strategy. It's a 4-to-1, 5-to-1, 6-to-1, 8-to-1, 10-to-1, 12-to-1 industry. Just like your banks, they give you 10%. No, not even 10%. Just like your banks, how they give you 3% interest. That's Forex, but Forex has the ability to double, to triple, to fourple, to even 12, times 12 your account. Yeah, well, so never look at the what if I lose, because if you look at the what if I lose, that means that you're not confident in your strategy. And strategy is very important. It's one of the most important things in Forex to have a strategy. Okay, let's analyze. I'm going to give you how I analyze, how my technical analysis is. But you need a strategy to understand how to enter a trade and how to exit a trade. And that, for me personally, it's a personal journey. You can't teach someone their strategy. You can't. We're all different. We all see money differently. Because Forex is money. And as Forex is the relationship between money and psychology. So your relationship and how emotionally bonded you are with money is how you're going to trade. If you're looking for quick money, you're gonna trade lower time frames. But if you're here to invest and make more money and less impulsively, you're gonna be long term like I am. I'm a long term trader. I don't mind holding a trade for more than 4 months. This one, you should check out my previous video. I entered it around last year, December. Okay, so let's analyze. So currently we are holding buys. Why are we still holding? Because we are seeing bullish characteristics. Whenever you see a bull characteristic, you just continue holding. That's my stop loss. So what are we looking at? We're looking at these moves. Looking for impulsive moves towards the upside. We're looking for small retracements of our impulsive move towards the opposite direction. This is where market decides to gain strength. It is getting more buyers into the market because price drops, right? So more buyers are entering the market. Why? Because price is cheaper, right? Price fell. So now price is cheaper. meaning more buyers are entering the market, right? So this is where the market gains momentum. And then we are looking for a continuation of that pattern, right? You're looking for that move towards the upside. This move towards the upside is creating what? It's creating higher highs, creating higher lows. Higher highs, higher lows, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Retracement. Retracement obviously is going to have very bearish characteristics, but I won't totally classify them as bearish because it is a retracement and you have to treat it as a retracement. Once you treat it as something else, that means that you don't respect the market structure. The market structure is the only important thing in Forex. Indicators, robots, talk, no, market structure. Learn market structure. Retraced, right? So when it retraced, what happened? Gained momentum to do what? To impulsively move upwards. And this is easy, not easy, simple, simple. So this theory right here is what I saw here. Yeah, well, so let me explain. So as you can see, we have a zone there, right? And we have a zone there, right? Where market decided to respect these two areas. So we are looking for this pattern right here, this one, because these ones are random because they're impulsive moves. But we are looking for this structure right here, right? So if you can take it back to our practical, which is our chart, you can clearly see the structure right here. Yeah, well, let me just draw it out for you guys. Was in wanna got I wanna be totally transparent with you guys. I upload free forex videos every single week so that you guys can also eat. I understand why people pay for forex lessons. Strategy, I understand. But to teach you forex, like, why do I have to make you pay for me to teach you forex? I mean, I don't need your money. I'm trading. So when I just listen to how I trade, listen to how I trade and apply for free, my guy. So yeah, we created the structure, the one that we're looking for here in practical form. So now we understand that we're looking for one thing. We are looking for impulsive moves, retrace, impulsive move, right? So we're anticipating that move right here. Why? Because we understand our theory, right? And exactly that, our theory played out in a practical sense, whether the metal of gold gained more investors. Gold will forever have more investors than people investing in the USD, right? Wow, that will depend on the time frame. Don't forget, forex works on time frames. We have the 1 hour. Taking a while because I really use the 1 hour. I'm a long-term trader. I know my stuff, so 1 hour is also too short for me. I like the 1 hour to explain my work because it's more detailed, but we have the 4 hour, which is the one I use the most. And we have our daily, which is the one that I also use like my 1 hour because it doesn't give you information. It's per day. Like it doesn't give you much information about anything. But when we go to weekly, a collection, right? A collection of days. That's where we get data, hardcore data. You know, so that's why we are able to buy price in that area, in this area. This is the weekly chart. So it has been 1, 2, 3, 4, almost a month. Almost. No, I entered the trade here. But yes, the breakout. Because you see, we've been consolidating here for weeks. 4 weeks. Trust me, I know because this was during December. I didn't feel it though because I was out with my friends. Yeah, enjoying December. So I didn't feel much of it. But now I'm feeling it because now constantly I'm on my phone making money. So now I feel it. But it's been a good week because we have three strong bullish candlestick towards the upside, our initial direction. So we are hoping that this is a retracement, even though we're seeing this beautiful doji point printing out, which means that we might start selling the gold. But I'm trusting my strategy. My strategy is telling me that we continue upwards. This, I have to point out again, is the weekly time frame. Who do you know trades the weekly time frame? Mm. Indoor, Tamchid. Indoor. Ah. So, for our to just complete our analysis, it's taking a while to load. Maybe it's the network. Yeah, network, yeah, me bad. Network, yeah, me bad. Let's go to our 4 hour. There you go. So now, why did I draw these trend lines? Trend lines are indication that market is about to break towards the upside. We know this type of structure is what we call a descending triangle. A descending triangle always breaks out towards the upside. So whenever we see market creating lower what? Lower highs but higher lows. That's what we call a descending triangle. Why do I say higher lows? Because descending triangle has to descend, right? So most you see these lows right here. Let me use this trend line to indicate for you guys. See this trend line? See this trend line? It's connecting lows, right? These lows are making higher lows. So there's a descending triangle. We are we still have a majority of sellers in the market, hence the overall move being high lower highs, right? We still have sellers in the market, but now so get this appearance chat, yeah. You see how I can't trade without market structure. Hopefully you guys are understanding this. There's no indicators on my chart, there's nothing. Purely market structure. And now Ansaibo network. So back, market structure back. So now because of the high number of sellers in the market creates lower highs. Yeah, well, market creates lower highs. But now we are still we still have slow. We still have buyers in the market. What we are still we still have buyers in the market from where from this initial buy move. So buyers are showing their presence here by changing market structure. They change it slightly because now in a downtrend we are creating we're creating higher lows. That does what? That congest right at this area, creating an area of interest. And what happens? Market cannot hold this pressure. It cannot hold it. It's suffocating. It's under intense pressure. Because now we have a majority of buyers, but now our initial move was no, we have a majority of sellers, but now our initial move was buy. So now we have a debate here of where the market should go. Should the market go down in support of sellers, or should the market go up in support of buyers? So that's why you see this huge candlestick printing out. Because now we have all that tension building up, building up, building up, and then all of a sudden shoots out. Yeah, well, if you're a short-term trader, then you're making big money on this move. Well, this market structure is very important for short-term traders because it shoots out. You see these dodges, you close your trade, you make your profit for the day. Yeah, well, but if you're a long-term trader like me, you see this move and it indicates to you that you still are safe in holding your trades because buyers are still in the market. Buyers are still supporting the fact that market needs to go up. Gold needs to be bought by more people. That's why buyers are still in the market because they have the um, curiosity. They have their bayazithemba and bathemba abathengi bazobona nabo iprice ye-gold inyuka. Xa iprice ye-gold inyuka mina for like the ones who are inside are making more money. The ones that are outside are seeing the ones that are inside making more money by trading gold and want to now invest in gold. So they buy gold, doing what? Pushing the price of gold even higher. So that's my version of this trade. That's how I see it. I see it making more highs, higher highs, and us making money. That's what we trade. Sifuna imali nje. Imali uyifumanayo. Uhlele betting yakho. Analyzing for 12:30. Making it 10K. Easy. Okay, let me show you the money because Naya's Nitandi money. I mean, if I was not talking about money, most of you won't be listening to me now. So I never press this button, the middle button. I never do. Nah, I never do. Why? It's part of my strategy. So whenever you are writing down a strategy, you need to write it down in bullet form, right? And never disobey whatever you write down on your paper. I'm gonna disobey one of my laws because I love sharing this type of information with my listeners. So your trade button, whenever you press it, you are able to see the money. Once you see the money, emotionally become invested. You're already making plans with the money that you don't have. This is 560, no, 546, 547 now. Rand. This money is not my money. It's money that's still floating. Has floating profit. It's not mine. But now when I see it, I start making plans for it. And now all of a sudden I'm emotionally attached to it. And now once you're emotionally attached to it, don't forget momentum in Forex is money. So now once you're attached to the money, you're attached to the motion of the market. Now you don't read it properly. Now you don't see what I see. Because I see this as a game. I see it as tic-tac-toe. X and O's. Simple. Yes, no. Red, green. Now when you don't see red and green, you don't see yes or no. You start making excuses now for seeing what you want to see. Now you're emotionally invested. And once you're emotionally invested, you lose. You lose. You lose. Because you can't be emotional there. You can't. This is a game that helps you make more money. So don't press this button. Because you're not trading for this button. You're trading because you love playing this game. You love playing this game. You love drawing. You love seeing the market how you see it. And it making money by how you see it. So advise this button. But since we live in the world that we live in, money is very important. So that's mine. I've become so detached to money, it's crazy. Because I make it looking at charts and drawing lines and rectangles that I read in color. But yeah, that's mine. Till next time. And yes, it is a real account. It is a real account. uyabona now. Adlali boy, adlali.